Brad Keithley, Managing Director of Alaskans for Sustainable Budgets. Welcome to the weekly Top 3, the top 3 things on our mind here at Alaskans for Sustainable Budgets for the week of March 23rd, 2026. The weekly Top 3 is a regular segment on The Michael Dukes Show. The show broadcasts on both Facebook Live and YouTube Live, as well as via streaming audio from the show's website, weekdays from 6 to 8 a.m. I join Michael weekly in the first hour of Tuesday's show from 6:10 to 7 a.m. for a discussion between the two of us about our 3 issues. We post the podcast of our discussion following the show on the Alaskans for Sustainable Budgets Facebook, YouTube, SoundCloud, Spotify, and Substack pages, also on the Alaskans for Sustainable Budgets website, as well as the project's page on national blog site, medium.com. You can find past episodes of the weekly Top 3 also at the same locations. Keep in mind that in addition to these podcasts, during the week, you can also follow and participate in the discussion with us of these and other issues affecting Alaska's fiscal and economic condition by following us on the Alaskans for Sustainable Budgets Facebook page and through our posts on Twitter. This week, our top 3 issues are these. First, we examine what the successful NPRA lease sale means for Alaska. Second, we discuss the source and extent of the problems the AKLNG project is facing in the legislature. And third, we examine the upcoming challenges the legislature faces in finalizing the FY27 budget. And now, let's join Michael.
Brad, we got a lot of stuff to cover today. There's a lot of things happening around the state. Some of this I'm just shaking my head about. Let's get started, though. Number one, what does the NPRA lease sale, we've been hearing all about it all weekend, what does the NPRA lease sale actually mean for Alaska from your perspective?
Well, Michael, I've got to say that I was surprised at the level of success of the lease sale. Particularly after the experiences that we've had with past lease sales and with the Anwar lease sale and with the most recent Cook Inlet lease sale, I wasn't expecting that level of interest. I was expecting Conoco to sort of fill out the edges of acreage that it had in the NPRA as it explores more, discovers more, does more work. It realizes that the formations that they're producing from or potentially may be producing from extend beyond the edges of the leases they have, and they want to fill in on the edges. And I sort of anticipated that, but I didn't anticipate Exxon coming back into the state, and I didn't anticipate Shell and Repsol forming a joint venture to bring Shell essentially back into the state. Those were surprises, and good surprises. And then the other big bidder was one of Bill Armstrong's numerous subsidiaries that he uses, funding vehicles that he uses to acquire acreage. And that's a moderate surprise, the extent to which they bid in. Now, all of this, I mean, to put it in perspective, all of this is sort of within the existing sort of fill-ins within the existing outline of existing leases, Exxon's is sort of a step out. I mean, Exxon's goes toward the lake in a way that no one has before because they've been restricted. The lake's been off limits. The area around the lake's been off limits. And Exxon stepping in there, I think, is a sort of a step out. But still, I mean, the presence of Exxon coming back into the state after essentially saying goodbye, and Shell coming back into the state in the way they did with Repsol is a surprise. So I think those mean good. I think those mean very good things. It probably also means, I've tried to look at this in the bigger picture, and I've talked to some people in the industry about the bigger picture. It probably also means that there's some concern that lower 48 shale may be running its course. A lot of the good shale prospects have been developed. The prospects that are being developed now are more marginal. They're still good, but they're more marginal. There are certainly international shale prospects that are developing in Argentina and elsewhere. But it may mean that shale has sort of run its course, and as people are looking around for what's next, and it's good news that people are looking around for what's next. I mean, 5 years ago, people were sort of saying it's a dying industry. We've seen the peak of production, and we're going to see it die off. People are no longer saying that. But it means as people look around for new opportunities, and they focus in the U.S., they're sort of refocusing in a way on Alaska, not in a huge way. This isn't a huge lease buy, but there's some new attention or some reattention to Alaska, and so I think that means a good thing also. Now, having said that, in the big scheme of things, 163 million, though it seems like a large number, and though it is the largest lease sale out in NPRA that we've had, it's from the standpoint of the industry as a whole, sort of a drop in the bucket. So it's sort of what you can view these things as is sort of, I mean, it's different for the different companies. For Conoco, it's solid fill in the blanks on some acreage that they're seeing borders their existing acreage and may have productivity, may have a role to play. So that's fairly solid. But for Exxon and Shell and for Bill Armstrong's group, it's more sort of a bet, sort of a wager on whether there's potential out there. Armstrong sees extensions of what he's found in Pica and elsewhere, sort of extending to the west, and I think he's chasing those, which it provides a good opportunity. I think Exxon's seeing a high potential around the lake if they can get in there, if they're actually going to be able to develop that. And the bids they made is sort of a bet on whether they can, a wager on whether they can actually ultimately have access, be able to follow through on those leases. And Shell Repsol, to some degree, I mean, Repsol seems to be sort of following what they've got with Pica. They're a partner with Oil Search in the Pica prospect. And Repsol seems to be somewhat following that, and having Shell on board with that sort of hedges the risk a little bit.
Right.
And so it's a combination of, with Conoco, fill in the blanks, with others, it's sort of a risk play. But it's hard money. 163 million is hard money. And it's really those people saying we see potential out here, and we're willing to sort of bet that sort of dollar figure on providing access and sort of giving us the opportunity to explore and see what there is out there.
Now, one of the biggest problems, of course, with this is that there was a court decision that said it was an injunction on certain things, especially stuff right around Chesapeake Lake. And some of those tracks were still in the lease, and they were bid on. And so I guess there's still some question as to whether or not that's going to come about. Is it, the court case is going to continue? These guys are still betting that these pieces will still be available. What do you think here?
Yeah, that's Exxon. I mean, Exxon is the one who really went in that area. And it's always been, that area has always been defined as an area of high potential in the various analyses that the federal government has done of what the potential is of various leases out there. And it's always been defined as an area of high potential. Exxon's betting is betting a little bit of money, and it's sort of a hedged bet, because if they get precluded from developing those leases or exploring on those leases, if they get precluded from that, they get their money back. So it's sort of a hedged bet, but it's an expression by Exxon that we see potential there. We're willing to put a little bit of money down, and in the context of Exxon overall, this is sort of like pocket change. We're willing to put a little bit of money down to see how that plays out. But the thing with Exxon is they're going to give some attention to it. I mean, Exxon is big on focus, right? On not diffusing your focus over a lot of stuff. I'm focusing on potential big things. And Exxon's essentially saying, we think this is worth enough that we're going to give some attention to it. Lot of years, decades probably down the road, whether that gets developed, at least a decade down the road, whether that gets developed, and a lot of battles in between. But it's interesting that Exxon stepped up and did that.
Brad Keithley, Alaskans for Sustainable Budgets. All right, so the big question is, what does this mean? Because a lot of this is of course, on federal land, and so we won't be seeing a lot of the dollars drain down into the state, or as much as we should have, or would have if it had been on state land, I guess I should say. So what does it mean for the state if all of this stuff gets leased, if it gets explored, if it starts to get developed? How much is the benefit going to be towards Alaska in the end here?
Yeah, it's so the One Big Beautiful Act contained a provision that changed the royalty share on new NPRA leases. That was one thing that Nick Begich accomplished or claims credit for in the One Big Beautiful Act and the Federal Act. And it changes the royalty share from what had been a 50-50 with the state, but with the 50 that's going to the state sort of held in trust for the local communities, to a 70-30, if I recall correctly off the top of my head, with that 70 not restricted on new leases. So it means something in terms of royalty that ultimately gets developed. The big thing for Alaska, though, in terms of federal lands, is what our production tax provisions are. And as I've written and said on the show a number of times, I think we're vastly under collecting on where our production tax ought to be right now. So we need to address that. We need sooner rather than later. We need to address production tax and position the state to benefit in terms of production tax off those leases as well. But with respect to these leases, we've got a while before that kicks in. Now, with respect to the existing leases, the existing development that's going on in NPRA and the existing production that's coming from NPRA, particularly Willow, we don't have the luxury of time. We need to address production tax sooner rather than later with respect to those.
Yeah, at the state level, because that is not affected by the new One Big Beautiful Bill stuff. So that's already locked in at a certain amount, and so we need to take a look at that. Renee had a question, and I asked her if it was about gasoline or natural gas. She says natural gas. She says, Brad, how far do you think gas prices will go? She says she's very worried. She's down in the lower 48 planning to move to Alaska. She goes, if it moves too high, my move is in question. I don't know how that would affect her move particularly, but what do you think is going to happen with gas prices? With the whole volatility in Iran and Straits of Hormuz and yada, yada, yada. There's a lot of different questions in there, but what are your thoughts on gas prices, LNG?
Well, LNG prices, world LNG prices. I think what we're going to see out of Iran is sort of a reset. We were on track to have a huge surplus in LNG. We were on track to have a surplus in oil that was going to drive prices down in both of those products, from an oil standpoint down into the lower 60s, possibly hitting the 50s. That's sort of where the consensus was on where those prices were going. I think we're not going to continue to see the highs that we're seeing right now over an extended period. If we did, we'd see a huge, demand reduction, demand destruction, and we'd see, a reset of supply demand in any event. But I do think that we're going to see the consensus seems to be that we're going to see a reset of prices into the high 60s, low 70s on a fairly long-term basis as a result of Iran. And I think we are going to see some, reset in terms of LNG prices on a longer basis as a result of Iran. So it's not going to be expensive. Let me try it this way. It's not going to be as expensive as it seems like it is right now, but it's not going to be as cheap or as inexpensive as we thought it was going to be before the Iran conflict started.
I thought it was interesting that you brought up the decline in shale and fracking. That is something that I hadn't considered and hadn't been following along with. As more and more of these easy fields get picked up and get dwindled down, I mean, are we looking at a decline of what, 10 years, you think, before we start to get into some of the where it's just nothing but the harder fields left over, or where are we at with that?
Oh no, it's going to be a fairly long tail, fairly long decline. But the feedback I was getting from the people I was talking to is the easy pickings is sort of over. The big rush to shale is sort of over, and the huge potential that people have seen out of shale is sort of over, and we're sort of in the plateau, if you will, if not heading toward a decline, a long decline. Excuse me. So people are beginning to look around. Companies are beginning to look around for what else, what's next after shale. I mean, as I said, 5 years ago, it was shale and then there's nothing. We don't really need to worry about what's beyond that. We need to, be developing wind farms or solar farms or whatever, biomass. But now we're going to continue with oil and gas and sort of what's next out there. So I think the NPRA sale benefited to a degree from that perception.
It's going to be interesting. The one big beautiful bill. If we start with this new percentage, we're still going to have to bust off some money for the local communities, but it will mean more money in Alaska's coffers. I wonder. I know there's been some pushback from some Native groups and some support from some Native groups. I wonder how this is going to make a difference in that.
You mean the increased royalty?
Yeah.
It probably, what makes a difference, I don't think the increased royalty is going to have that big an effect. I think what makes a difference, where you see the Native groups aligning with the development or the lease sale and the development of these leases, is Native groups who see benefits from contracting and from equipment and from local employment and that sort of, and local revenues in terms of property taxes, from particularly property taxes in that sort of context, versus those that don't see that as a big benefit. See, the reduced access to land or potential harm to land as a bigger issue.
Continuing now, Brad Keithley, Alaskans for Sustainable Budgets, the weekly top three. We are on to number 2, in which Brad asked the question, what is the problem with AKLNG? Wow, Brad's asking all the good ones today. What is the problem, Brad, with AKLNG?
Yeah, I probably should have made that plural, shouldn't I? Problems with
problems,
with AKLNG. We're in a sort of an odd period with AKLNG right now. I mean, the project from a commercial standpoint, commercial from the construction standpoint, seems to be fairly solid. I mean, Glenfarne seems to have lined up a lot of the pieces that they're going to need that you would need to construct the pipeline. And so that's sort of set. But there's 2 big issues out there. One is, will they ever have customers? And 2, the relationship with the state. And that's you would think the relationship as long as we've been doing this, as long as we've been at this, you would think the relationship with the state would be sort of set. But the challenge here is that the legislature's advisors, Gaffney Klein, came in and basically said, look, you're not really aligned. The state scheme that we set up 10 years ago, the last time we looked at AKLNG, is not really aligned with where this project's going to be. That project was sort of focused on a producer-led project. It was focused on big state active involvement. It was focused a lot on that line sort of being a common carrier line, being a pipeline that people would put product through, as opposed to the pipeline buying and selling. And so you're not really, the scheme that you've got set up isn't really set up for the current environment. Plus, we've got all sorts of issues on the severance tax, production tax side. And so the advisors came in, essentially said, told the legislature, you got to look at this stuff. And the legislature, is not really set up for looking at stuff. I mean, the legislature is really set up for taking advice from others, particularly the administration. You particularly want the administration to be looking at these same things and giving advice to the legislature on how to deal with this, how to deal with these things. And the administration and the legislature just aren't getting along.
Yeah, that's true. That would be assuming that the legislature would listen to that advice.
Yeah, there's just no trust in there. So you've got sort of this absence or this vacuum that is created by the legislature understanding they need to do something. They need to sort of relook at what they've done. But this sort of vacuum on leadership on where they go. And the administration's response, and so Glenfarne's response to that, Glenfarne, who does not really have to deal with states like Alaska in its other projects. Its two other projects, main U.S. projects, are in Texas, and so there's not really the state role in Texas that we have in Alaska for these sorts of natural resource developments. And so Glenfarne, who's not really used to this environment, has not really stepped in and helped fill that vacuum with a lot of information from their side, or a lot of participation and interchange with the legislature from their side. In fact, they've sort of been standoffish in terms of interacting with the legislature on this. And the administration, I mean, this new proposed property tax raises questions, at least from the legislature side, I think valid questions about, is Alaska really going to get out of this what we deserve, what we need, what we should have out of this project? I mean, is the administration is not being very comforting in terms of Alaska getting out of the project. Being very firm and saying, yes, Alaska's getting its fair share, and this is why we're getting our fair share. It's sort of, the administration is just sort of added to the vacuum by not being very active in playing a role in describing, why Alaska's getting its fair share. And this new proposal the administration has come out with, in terms of turning the property tax from a fixed tax into a volumetric tax, dependent entirely on volumes flowing through the pipeline, that's not very comforting, because the level of the tax produces a lot less revenue than I think than one would anticipate under the existing tax structure, and B, it's not very comforting in terms of, will the revenue be there when we need it? I mean, it's sort of the volumetric tax the legislature or the administration is proposing is sort of a down the road thing. Once the projects start, there's not a whole lot of upfront money of it to it, and both the legislature and the localities are saying, hey, we're going to need upfront money to deal with the potential costs that are coming down the road from the project. So there's just sort of this donut hole that's been created, where there's a lot of sides saying we need to do things, but not much guidance on what needs to be done. And into this vacuum, Kathy Giesels stepped with her proposed legislation that I don't think solves anything, but it's sort of a response to, hey, we know we need to do something. We know we need information. We don't seem to be getting information out of anybody. Right. And so what we're going to do is we're going to legislate that we get a lot of information and we get a lot of control, because we're not comfortable the state's getting its fair share. If we're not comfortable from either, we're not being comforted either from Glenfarne or from or from the administration that we're getting our fair share. So it's just sort of this vacuum that's been created. I'm not a big fan of what Dunleavy's proposed on the property tax side. Now, I understand the argument that upfront money, forcing the project to pay upfront money on property that on property as it's installed, or property once it starts flowing, paying big chunks of money, big chunks of property tax. I understand that affects the economics, but there doesn't seem to be an effort to sort of find a middle ground. I mean, from a rate design standpoint, you can have a combination of some upfront money, some fixed amount of money, and then a volumetric revenue charge on top of that. You can combine those two in a way that sort of tries to deal with these issues. And it looks like the Dunleavy administration has just sort of gone off the other end in terms of how it's proposing to deal with it. So I think there's a lack of. I think the fundamental is the legislature's been told by its advisors, its consultants, that it needs to rethink some things that's in the existing legislation, and it thinks it does, and I think it does, and so it's been told that, but it's not getting the information that it feels it needs or the comfort it feels it needs to be able to rethink those things. And it's not getting comfort. I mean, from the Dunleavy proposal of the property tax, it's not getting comfort that the Dunleavy administration is thinking through those things particularly well either. So it's with only half the legislative session left to go, it's a very odd situation to be in. Things that you think we would have solved 2 or 3 years ago are suddenly just being thrown up on the table now.
Well, and you talk about the Dunleavy administration going too far off the other side. I mean, I would almost argue that Giesel did the same thing. Instead of just asking for more information, now they want to have their hands in everything. Right now, they want to have override and an oversight of every little part of the project, and that makes it a little less appetizing for private equity to want to come in and do this when it's going to be a politicized process at that point if this bill passes. Right?
There's a trust issue, though. I mean, this is her reaction, and I agree, it's over the edge, but it's a trust issue. She's not feeling the legislature as a whole. I don't think, maybe the House is a little bit different, but the legislature as a whole, I don't think is feeling a real good comfort level from Glenfarne. There's not been a forthcomingness from Glenfarne. I mean, I remember back in the Murkowski administration when the producers, and I was part of that team, when the producers were negotiating the contract, the agreement with the administration, there was a lot of detail that went on. I mean, there was a lot of give and take between the producers and the Murkowski administration in terms of economics, in terms of issues, in terms of how things might play out. And there was a really solid effort to bring all of this together in a document. Now that ultimately fell apart because the Murkowski administration fell apart, and then it fell apart because of the shale revolution in the lower 48. But there was a lot of effort, good faith effort between the producers and the Murkowski administration to try to come up with a solid agreement on how to deal with this. And when you look at projects elsewhere, British Columbia sort of went through the same process. They had a solid effort between government and industry to come up with the terms under which the projects down in British Columbia would continue. There's not been that here. There's been, as I say, Glenfarne's not used to dealing in an environment like this, and that's probably part of the issue, but there's not been that sort of give and take and that sort of solid integrated effort that at least has been obvious to the public. And so I think there's just a level of trust. And so when you view it that way, Giesel's response is sort of an overreaction to the lack of trust. It's sort of like, we don't trust you, and so we're going to regulate everything. There's no basis of trust on which to pull back and not regulate very much.
Yeah, and I know Glenfarne was going on and on about proprietary information and competitiveness and everything else, but I remember, I believe it was during the ACES debate, or it may have been during Walker's China thing. I remember that there was, like a clean room or whatever, where the legislators could sign an NDA and go look at the information. They couldn't share it publicly, but at least it would inform their decisions. And there was an opportunity there for them to go and look at a lot of these proprietary numbers and things like that. Why doesn't Glenfarne do something like that?
I don't think they're used to it. I don't think they're used to the situation. And I think they've been very focused sort of on the other side of the equation, trying to get commercial agreements trying to get people to buy this stuff and trying to enter into commercial agreements over how they would build the pipeline. I think that's been their focus. They've sort of assumed that it appears, at least from my perspective, they sort of assumed that the state's on side or on board. And so they've had all of their attention on the other side. And so it's, there is just a lack of, I think trust. I mean,
Right.
and Giesel's used that word, but a lack of sort of integration, if you will, between the administration, the legislature, and the project, to try to bring these things together.
It doesn't help that Glenfarne has promised already. I think they've missed 2 deadlines, and they've got a third one this month for their final numbers and investment decision numbers, because they said first it was going to be in the fall, then it was going to be in December, and now they're saying it's, the state said you got to have it in March. We got to know what's going on, and we're still not getting the numbers. So we still don't know what the magical number is. Is it 60 billion? Is it 44 billion? Is it 80 billion? Nobody knows. And that, I think, is leading to this, is adding to this whole conundrum of trustworthiness.
Yeah. Again, I think that's a product of Glenfarne not being used to operating in this environment. Those were made up dates. I mean, those were dates. That's what a marketer does. I mean, that's what your real estate agent does, right? I've got other bidders on this property. You got to decide by thus and so, or you're going to lose out. I mean, those were marketing dates from the beginning. They weren't solid dates. They weren't real dates from the beginning. They were just sort of, let's try to push this along. Let's say, let's put these dates out there and push people toward these dates. That's what developers do. They set these goals, and they push people toward these goals, these artificial goals that they set out there. So that was never, I never took those as realistic. I always took those as, yeah, okay, fine. That's what you're going to tell people today. I get it. And then sort of like Trump on, we're going to bomb all their stuff, bomb all of Iran's stuff. Well, when you get there, it's sort of like, well, not that date. It's going to be some other date. But it has led, people in the state probably believed it, and people in the legislature probably believed it. And it's led to that sort of, it has led to an erosion of trust. This doesn't get solved in the remaining legislative session. This doesn't get solved in the remaining year, I don't think. You can say, well, we're going to have another special session in an election year. That's unlikely, but you can say we're going to have another special session and work through all this stuff. That's not going to happen. You've got to have a lot of background meetings. You got to have a lot of give and take. You got to have a creation of a level of trust. You got to have a creation that we're all on the same wavelength, trying to achieve the same objective. And that's not going to happen in 30 days or 45 days or 180 days or any of those sorts of timeframes.
Right. The likelihood of them having a special session during an election year is pretty darn low. I saw Bruce Tangeman said something. He said, Alaska makes dollars only 4 ways: CIT, prop tax, production tax, royalties. He said royalty relief will be the next requirement. Production taxes are already being manipulated. CIT is its own goat rope, and AGDC gave away 3/4 of the project Glenfarne. How much are we even going to make on this? It's turning into a break-even proposition.
Yeah, and that's part of the mistrust or the lack of trust out there. I don't think anybody has a good feel for this. The last time I saw revenue projections, last time I know that revenue projections were published, state revenue projections from the project, were in like 3 years ago. And now the administration has promised to update those and publish those in connection with its property tax proposal. But there's not a good feel. This is also part of sort of the lack of background development that's gone on. There's not a good feel, I don't think, on anybody's part on what the revenue stream is to the state that's going to result from this project. And so you're sort of groping around in the dark. And that's, again, part of what's going on with Giesel. I think she's sitting there going, I don't even know what the revenue stream is. And so her response to that is, give me a lot of control. Give me a lot of control over this project, because I don't trust where it's going. And it's an overreaction in terms of give me too much control, but give me a lot of control because I don't understand where this project's going. I think there's as always, when you get into a situation like this, there's probably a lot of fault to go around, but I just don't think the administration has done a good job of outlining. They've done a great job of outlining what the big scope pictures are. I mean, yes,
Right.
we get energy for Alaska. Yes, we get a lot of jobs in terms of construction. Yes, we finally will find a way to monetize the North Slope. But I don't think the administration's done a good job of bringing it down into things I look at, which is a revenue curve, and how the pieces of those revenue curve come together. Without that, I mean, just sort of throwing the property tax in the middle of it and saying, "Bam, let's go to a an entirely volumetric property tax." In the middle of that, you've got no context. You can't say, "Oh, we're otherwise going to get X, and this will reduce X by Y, but we'll still get X. I mean, X minus Y."
Right.
There's no context to
Right.
see that. So,
And I think Rob agrees with you as far as Glenfarne being kind of out of their depth in this. He says there's a cultural gap between the way Alaska is used to operating and the way Glenfarne is used to operating as well. So I think he agrees on that. He also mentions that Glenfarne has said that the feed study and cost estimate is done. They're just not releasing the number. Again, this goes back to my question of if you've got the number and you know it's there and you know you've got all the details, we've done these NDAs before. We've had legislators be able to look at those numbers to be able to make those decisions. You just need to be able to make that happen.
yeah, and I'm not even sure there's confidence that the administration's seen those numbers. Now, feed, there's a difference between having feed numbers and going to feed and deciding to go to feed. I mean,
Right.
You don't decide to go to feed front end engineering and design. You don't decide to do that until you got financing within the ballpark, and you've got
Right.
sales agreements within the ballpark. We don't have that either. They may have a feed cost number, but they don't have the other pieces of feed that have come together as well. But I mean, I don't have a sense, and I don't think the legislature has a sense that even the administration is comfortable knows those numbers. I think there's a sense that the administration said, well, whatever it is, it's a private led project.
You do you. Yeah.
Yeah.
You do you. Tell us when you're done, kind of thing. We're not looking too deep on some of that stuff. But that's the difference between feed and FID, right? I mean, that's the because FID is final investment decision.
Right,
That's
right.
when the real number comes out. Yeah.
Right.
Bruce Tanchibit said he said it's starting to look like Governor Murkowski and Jim Clark's 1,000-page gas proposal back in 2003. Don't read it, don't amend it, don't ask questions, just approve it. You think? Is it looking at kind of the same thing?
Well, the problem, yeah, I mean, that was the perspective of some legislators back then. The problem is we don't have a 1,000-page document. I mean, the thing with Murkowski was we had a 1,000-page document. And there was a lot of effort put in on that. I mean, I contributed some number of those 1,000 pages, and there was a lot of effort put in on that between the administration and the producers to try to negotiate it. Now, yeah, from the standpoint of the legislature, some legislators felt that they sort of got handed this pile of documents and said, take it or don't look at it, just take it. But there's not even that this time. I mean, there's not even this sort of comprehensive thought through sense that the administration and the project came to this comprehensive thought through process on how the state's going to share. It's sort of it's murky in the normal sense of the word as opposed to in the Murkowski sense of the word.
Right. Well, it's like they said, what we have here is a failure to communicate, right? That's the whole problem when it comes down to it. Okay, we're continuing with Brad Keithley, Alaskans for Sustainable Budgets, the weekly top three. We're on to number 3, our final topic for today. And Brad says there is a building challenge on top of everything else that we've been dealing with. There's a building challenge in the fiscal year 27 budget. What are we talking about here, Brad?
Yeah, so I tell you what is. I mean, when I say there's not enough time left in this session to deal with LNG, even if they devoted every waking hour to try to deal with LNG, I don't think there's enough time left in this session. But they're not going to be able to devote every waking hour to dealing with LNG because there are forces building that I think is going to suck the oxygen out of the room, out of the remaining time in the legislature, and that is the FY27 budget. I mean, you can't not read an article. You can't read a newspaper or a publication without seeing an article about somebody saying, oh, we need to spend more money on this. Education certainly has taken the lead. There are articles about how, yeah, we passed an increase last year, but it really wasn't enough. And so we need more money for K through 12. And look what's going on in Anchorage, and look what's going on in Matsu in terms of having to close schools because they don't have enough money. That's the argument being made. And so we need more money out of the legislature on K through 12. We have the administration itself saying that there's a maintenance problem, capital spending maintenance problem on schools, and that we may not have been doing this in the right way, and that we may need more money for capital spending on maintenance. And you can sort of go on and on and on down the list of people arguing why we need more money. I mean, the Fairbanks News Miner sort of has it right. They have an article an editorial that says the illusion of easy money and the high price of overconfidence. And it's talking about, the revenue forecast and the forecast of additional money for FY 27 and what to do about that. And they go through and say, we shouldn't spend it on dividends because they don't like to spend on dividends. We shouldn't spend it on dividends. We should start to rebuild the CBR. But they also say they're talking about the legislature. They should also direct one-time funds toward one-time uses, infrastructure projects, particularly those that unlock substantial federal matching dollars, fit that description. Strategic investments that strengthen Alaska's economy without committing it to ongoing costs it may not be able to sustain. So even the news miner who claims that it's trying to be conservative about this is coming up with a list of things that the legislature ought to be spending on. And then there is an op-ed that over the weekend that appeared in some of the papers with some guy arguing, some guy from the Southeast arguing that we ought to take all this oil money, this additional oil money we're going to have at FY27, and we ought to invest it in renewables because that'll lower energy costs in the state. I mean, we're entering this period where there's no end to the ideas that people are going to have for additional spending. So I think the great debate in the second half of the legislature is going to be how do we deal with all this? I mean, how do we deal with all these people seeing these dollars that are showing up in the revenue forecast and saying, oh, I'm just a one-time spend, or this is something that you ought to do with excess oil money, or this is, see how many jobs this would generate if we spend it on that. I think there's going to be no end to people pushing forward and saying that they know how to help the state deal with those additional revenues. And certainly there's going to be people that say, oh, we ought to pay it out in PFDs. We haven't paid a statutory PFD like forever in the last decade. And so we ought to be, fulfilling the obligation, what the statute says, in terms of PFDs. And so it's going to be that sort of push against an environment where we really don't know where oil prices are going, because if the war ended tomorrow, there would be a hangover effect, particularly on the LNG side because of the damage done to Qatar's LNG facility. But maybe that's sort of the only big thing that carries over in terms of if the war ended tomorrow in terms of energy prices. So we really don't know where oil prices are going to go. State revenues are going to go. We got a bunch of people saying, I got great ideas about how to spend this excess revenue it looks like we're going to have. And we got a legislature, some of whom are going to be conservative and say, look, we've been down this road before. We see this stuff go up and down. We're just going to sort of cut to the chase and go, with a $68 barrel or whatever the price level they decide, and my argument is we ought to go with the average of the last 10 years. We're going to see people try to do that. I think there's going to be a lot of debate, I think, in this last half of the legislature about where the FY27 budget goes. So that's going to be sucking oxygen out of the room. And people who say, oh, we got to settle LNG, there's just not going to be that much oxygen left in the room to be able to do that.
They're going to be worried about, well, we've got to get this budget passed. And of course, like we said, and like we've seen in the past, uh, when they had that last spike in the early 20s, when Natasha Ben Imhoff said, "We've got so much money, we don't know what to spend it on." I mean, that's kind of the idea, right? All this money is going to be not thinking about what is the long term thing. I mean, the newsminer had it right as far as saying, we should, if we're going to spend it, it should be one time money only on one time things. Of course, and you're talking about this education thing, and of course, all the education stuff comes from the fact that many of these districts decided to take one time money like COVID funds and spend it on reoccurring costs instead, and then use that reoccurring cost money for one time. It's a consistent problem where we're eating ourselves at this point.
Well, one-time money isn't one-time money. I mean, you build an infrastructure project, you set money aside for the infrastructure project, but then we get into the situation that we're in now where we got a bunch of this stuff that we can't maintain. And that's because at the time we did the projects, we didn't set aside, we didn't escrow, or we didn't otherwise provide for operating costs. We wanted to build it. We wanted to, give out these construction contracts. So we wanted to build these things. And so that was all one-time money because we're just going to build it. But it's not really one-time money. So when you do a bunch of that stuff, it adds to the long-term operating costs because you got to maintain them over the long period. So there's just a lot of, I think, the Iran situation and the spring revenue forecast has created a lot of uncertainty about what's going to happen with the FY27 budget, and sort of unleashed a lot of different pressures on coming to grips with that budget. And I think that's what's going to drive the legislature, or take the legislature's time in this last half.
I mean, that's my fear, is that they're going to repeat exactly what they've done in the past when they got a windfall. Instead of being, conscientious with it, they just spend it all. They just spend, just perp it out. Oh, look at all the stuff we can spend it. And that's my fears. That's where we're going to be. Brad, we got about,
and it's an election year on top of that. So that adds to the fear.
Right. What can I get you? What can I get for you? Because whatever they can add this year, they can then go back out on the campaign trail and said, look at what I did for you. Not understanding the 2 and 3 and 5 and 10-year costs of that. Look at what I did for you. And that's the other dangerous part. 60 seconds, Brad, here. Final thoughts for today.
Well, I think the theme, if there is a theme through here, is that there's a lot of uncertainty. There's uncertainty about the budget. There's uncertainty about AKLNG. NPRA is sort of certain, but it's long-term benefits, not anything near term. So I think there's a lot of uncertainty. And the problem with Alaska, or the challenge with Alaska historically, has been when there's a lot of uncertainty, we spend more because we may have more.
We got to get the confidence up. We got to get the confidence up. We got to get people to believe in us again. And look, we got all this money laying around. We should do something with it instead of putting it away for that rainy day, which we know is coming. We know the rainy day is coming. David says, I don't think David has been following this LNG debate. He says, just curious, why does this man think Alaska has no LNG clients? Who will Alaska sell to? Fairbanks, Villages, lots will buy LNG. Not sure why he doesn't see this. And I said it's about volume, right? I mean, if we sold all of the gas that Alaskans needed to Alaskans, that's just a drop in the bucket in the economics of building a multi-billion-dollar pipeline, right?
Yeah, I think it's 5%, maybe 10% of the total volume of the pipe. And if that's all we sell to, the cost is like $50 an MCF compared to the current price of $8 in the Cook Inlet. So it's there are people to sell to in Alaska. A lot of small volumes to sell in Alaska, but that's not what makes this project go.
Yeah, you've got to have the bigger ones. And of course, who knows? I mean, Asia, I know Harold's been going on and on about how China and Japan and Korea and Taiwan, with the closure of Iran and everything else, that they may be in the market for gas and everything. I mean, maybe, but again, we're waiting to see where that comes out.
Yeah, on Mondays, I publish Monday mornings. I publish an update on the latest futures prices in the LNG market. I mean, there's a futures market on LNG as well as there's a futures market on oil, and it's really interesting to look at what Monday's chart did. Monday's chart was a lot higher prices this year and next, but then there was a huge tail on the futures market that went back down toward the $7 range. in both Japan, Korea, the JKM market, the Japan Korea market, and in Europe. And so I think market players at this point are still viewing the LNG situation as a short-term situation. Yeah, Qatar says it's going to be out for 5 years. Maybe it's not. If the war stopped tomorrow, and yes, there are all these other projects on the board. So I don't think when you look at the futures market, I don't think market players are convinced this is a long-term issue. And people are not going to invest in Alaska LNG if they don't think it's a long-term player, if they don't think the long-term economics work. So yeah, there's a lot of, you can create a case, work yourself up into a froth about saying, oh my God, Japan's at risk, Korea's at risk, China's at risk. They ought to go out and find, replacement for LNG. Well, yeah, but there's additional LNG out there in the world. And you're not going to, even if the plant that got hit in Qatar is out for the 5 years, that's only a portion of Qatar's production. You're not going to go out and invest $40 billion or $60 billion or whatever the heck the number is in Alaska LNG based upon a 5-year gap or a 3-year gap or a 6-year gap.
Right.
It's got to be, there got to be longer term dynamics, and the futures market at least is telling you that's not there.
Do you think there's still a possibility that Trump could turn this into a strategic thing where it's a national strategic asset or something like they did during the war, World War II, where they built those? Do you think that's still a possibility?
Oh, sure, that's a possibility. But yeah, I was intrigued. The first tranche, Japan and Korea have committed to these investment funds in the U.S. The first tranche of the Japan funds, the Japanese investment funds, have already been announced. The uses of the first tranche, and Alaska LNG wasn't one of those. There were other energy projects in the lower 48 that were announced as part of that tranche, but not Alaska LNG. So yeah, I think there's still a potential. There's always a potential that Trump does that, but I just don't. There's no indication this second that he's going to do that, or that Japan, Korea are going to suddenly, view this as a hugely strategic asset in which they have to invest.
2 minutes left, Brad. What do you think the outcome is going to be of this legislative session? Are we just going to party like it's 1999 and spend all the money, or what? What do you think is going to happen with all the players that are in there now?
Well, I hate to say this, but I think Burt and Lyman will play a good role, a positive role in one respect. I think they will try to put a constraint on spending. I think if it were left to the House side and the House Finance Chairman and the House Finance Committee, I think they would spend like it's 1999 or whatever the hell the phrase would be. But I think Burt and Lyman have been through this enough times. They've seen enough of these cycles that I think they'll try to be a constraint on spending. Now, I don't think they're good on the PFD, and I don't think they're good on a lot of other issues. I don't think they're good on the POMV, and I don't think they're in oversight of the Permanent Fund Corporation. I don't think they're good on those things. But in terms of acting as a spending constraint in this situation, where all of a sudden we have this fly up in projected revenues and everybody wants to spend it, in this situation, I think they'll be a good constraint. And I think what the rest of the legislature is going to be is people coming up with, well, we can spend it on this, or we can spend it on that, or boy, education needs more money, or this needs more money, or this needs more money. And hopefully we see Burt and Lyman saying, yeah. But we're going to base the budget on $68 or $66 or
right.
whatever. I think we're going to see them sort of push back on that and act as a constraint. At least that's my hope. Because if they go over the edge and they say 70, 72, 74, if they go over the edge and say we're going to spend at that level, then boy, I think we're just digging ourselves a huge hole that 2 years from now or 3 years from now we're going to look back on and say, what the heck were we doing? But I have some faith in Burt and Lyman sort of acting as constraints in that regard.
All right. Well, that's it for Brad Keithley, Alaskans for Sustainable Budgets, AK4SB.com. Thanks, Brad. Appreciate it, my friend. Good to talk with you.
Michael, as always, thanks for having me.
All right, we'll see you next week.
Well, that's a wrap for another week's edition of the weekly top 3 from Alaskans for Sustainable Budgets. Thank you again for joining us. Remember that you can find past episodes on our YouTube, SoundCloud, Spotify, and Substack pages, and keep track of us during the week on Facebook and Twitter. This has been Brad Keithley, Managing Director of Alaskans for Sustainable Budgets. We look forward to you joining us again next week on the next edition of the weekly top 3.